What is going on, everyone? We hope you had a great weekend because the time has come. The Fed is about to cut rates this week, and they're doing it while the stock market is sitting at all-time highs. We've only seen this happen a couple times over the last few decades, and the results were pretty crazy. So today, we're breaking down what this means for stocks, what usually happens after cuts like this, and why this week could be one of the most action-packed weeks we've seen in a long time.
We can see that right now, U.S. stock valuations are at all-time highs, which is pretty insane to say, and the Federal Reserve is cutting interest rates as we're at these crazy valuations. As you probably know, the S&P 500 made brand new all-time highs last week, and as we can see here, had quite the week, especially on Thursday, where we had that really good breakout, and we're sitting just under 660 now on the SPY. But Mike, going back to stock valuations, it's a pretty weird dynamic to see the Federal Reserve cut interest rates this high. It's kind of like pouring jet fuel on a bonfire, right? Normally, if we're cutting interest rates, we're in a weak market environment.
Exactly, but that is not the case this time around. And we could see, historically speaking, when the Fed cuts rates in times where the market's at all-time highs, the market normally loves it even more. We can see from this data here, there have only been 2 years since 1996 where rate cuts happened with stocks at record highs, and that was 2019 and 2024. Basically, when the Fed cuts rates within 2% of all-time highs, the market does tend to rise going forward, where in 20 of the last 20 times this happened, the S&P 500 ended higher 1 year later. So that's pretty crazy. And yeah, Tom, this is a crazy stock market we're in.
It definitely is. And, I love seeing that bullish stat there at the 1 year later category with 100% of the time where the market goes green. But in the ultra short term, I am pretty worried as the market only goes green 50% of the time. And again, this is a very weird dynamic that we're getting into here, where the market is at all-time highs and the Federal Reserve is cutting interest rates. So we can see in the ultra short term, not the best, but as we go out and time progresses, things get a lot more bullish.
Definitely. And like you could see in January of 1885, you have some years where the market's up 7.3% the next month, but you also have other years like in August of 1986 where the market's down 8.3%. So the short term is definitely to be crazy. And talking more about what's actually happening this week on Wednesday, basically we are going to see an interest rate cut no matter what. The question is by how much? Basically, when we look at the probabilities right now, we can see that the FedWatch tool is showing a 96% chance of a single 25 basis point rate cut, but there is that 3.6% chance we might see a double rate cut. Not that likely, but it is possible. Either way, we're seeing a rate cut. And we can see that over these past few weeks, the market has been expecting more and more rate cuts. And, this one's going to be the first one of the year on Wednesday.
Yeah, it's going to be huge. Like looking at the Kalshi stats here, the percentage for 3 cuts this year went up to 46%. And, it supports the FedWatch tool with a cut being priced in for the September meeting, the October meeting, and the December meeting. So, 3 cuts being priced in 2025 now. And this has obviously changed a lot over the past few weeks. I know that there's been a lot of jobs data coming out, like the jobs data that hit September 5th with the non-farm payrolls and the unemployment rate that kind of surprised the market a bit there, especially with the non-farm payrolls. And that's really where the chances of 3 cuts this year started to really rise. So I found this to be a dynamic, of course, in the short term. And we've been talking about this a lot, Mike, with jobs data and the jobs market becoming weaker. And we can see here that the labor market is actually starting to crack a little bit. This is a pretty cool chart showing confidence and with jobs plentiful. And of course, this has been falling. And a lot of times that we see this data fall, Mike, recessions end up coming into play.
Yes, exactly. Like we're in a situation right now where the Fed is cutting interest rates to start to stimulate this economy again because, like you said, The labor market is cracking. There are so many different data points that show this, but this chart right here, like you said, Tom, shows an index of U.S. consumers saying that jobs are plentiful has declined to 34.1 in July, which is actually the lowest level since 2021, and this is down 22 points over the last 2 years, and it's showing that, the labor market is slowing down significantly, and whenever we have seen drops like this in the past, it has basically always coincided with the recession, but we're not quite seeing that this time around, which makes it so unique and interesting because the market is at all-time highs and, jet fuel is getting poured on the fire right now. So when we look closer at SPY, Tom, what are you seeing right now? We're hugging all-time highs.
We really are, and we're just under, I would say, a very key resistance at $660. I know that we're hugging the all-time high, and on Friday, it was pretty much right at $659.09. The official all-time high there is sitting at $659.11. So if we could end up seeing a good $659 breakout, I'll be watching for $660, but ultimately, $660 is going to be a nice whole dollar psychological level to watch for overhead. If we could get a good push through there, I think that's where we could get a lot more bullish and possibly look for more of a breakout, like with what happened on Thursday of last week. But there were a lot of supports formed last week as we started to break out. I think looking at some of the levels from Thursday and Friday, like at 650, will be pretty important. There were a couple bounces there, and then the next key support down around 655. So I feel like, Mike, as we go forward through the next few trading days, the big thing is going to be, look, are we going to continue with this nice upside momentum? We can see over the past couple weeks, especially since Friday, September 5th, where we had that negative jobs data, things have really turned around with the SPY, and the overall uptrend is still intact and higher lows are being formed. So if we see that trend of higher lows start to give out, that's where I'll start to shift and maybe become a bit more bearish. And I do think that some of these supports, especially like 655 that I listed, would be a very key level to break back below.
Yeah, and I am so excited for the market this week. We have, a handful of key levels overhead. It's certainly worth keeping in mind all of those support levels given all of the events and craziness that'll happen this week. But on top of the Fed cut, we also have triple witching this week as well. So basically we can see here that this Friday will be triple witching, which is essentially when you have stock options, stock index futures, and stock index options all expiring on the same day. And we can see, historically speaking, during September, this normally is a bearish sign. This doesn't mean the stock market has to fall this week, especially considering 2025 has been a historically strong year. But again, we want to point this out to everyone ahead of time so you can be aware of it heading into this week. We can see the market has only been positive 28% of the time during this week, during, triple witching events. So we can see all the Septembers lined up, and it's definitely interesting, and it's going to make for a more exciting Fed rate cut week than usual.
It definitely will, and we already know that September is a pretty weak month of the year historically, so this could definitely play a role and coincide with some of that other data that shows that September is historically not the best, and especially looking at those 5-day statistics, Mike, like the average and median return being down 1% is definitely not the best, so it's definitely some stats I'm going to be keeping on the radar for sure, but I know that a lot of people have also been keeping Tesla on their radar. Tesla has been exploding and has been one of the big stocks fueling this overall rally with the SPY. They were up 7% on Friday. They had a great rip Thursday as the SPY broke out as well. And everybody's like, okay, why is Tesla going on this massive run? And they've actually seen a lot of bullishness ever since Elon Musk has been kind of pivoting towards robotics. I know a lot of people have been talking about Tesla's Optimus robots. This is going to be a very big deal for them. Also, Tesla's board recently proposed a $1 trillion compensation package for Elon Musk, which is also getting a lot of attention. But I thought that some of these quotes, like Elon Musk saying 80% of Tesla's value will be coming from Optimus, is a pretty crazy quote, especially considering everything else that Tesla gets into with not even their vehicles, but even other things like solar and a lot of other avenues, of course.
Yeah, Tesla's like one of the hottest stocks in the market right now. I would say it is the hottest stock, and it has been like accelerating over these past few trading days. It is at its highest point all year long in 2025, and we can see that it broke through a critical resistance right around that 370 area that it has been struggling with all year long. You know, it's up 7% on the day on Friday. Tom, heading into tomorrow and the rest of this week, what levels are on your radar, and how do you view this current chart setup?
Yeah, so Tesla had a great run on Friday, and I think that coming into this week, we definitely need to see a $400 breakout happen. I know that we've been on this massive rally, and there's a lot of bullishness with it, so it could end up breaking out here. But even looking at the Bookmap and going into the X-ray vision on Friday morning, there was around 372,000 shares stacked up at 400. Now, granted, Tesla has been breaking through a lot of key levels lately, so again, it could have the momentum to get through there. But I think that as we go forward, and especially for shorter term traders, looking at that level for a breakout will be the way to go. And if we go to the daily, I'm really glad that you pointed out that resistance breaking around 365 to 370. That will be critical and will also be used as a key level of support. But I also like 380 as a key area of support where Tesla has bounced a lot in the past as well.
And like when you look at Tesla chart, like especially compared to any other tech stock out there, when this thing has momentum, it goes crazy and it continues to feed off of itself. And Tesla, as we can see on the chart right now, has had multiple periods in the past where it goes on extended, just like parabolic runs for multiple days and weeks at a time. So definitely continue to keep Tesla close on watch. I would say $400 is the most important level to watch. It's a heavy resistance overhead, but if it can break through that, that can be a big win. Tom, if we do break through 400, what are like the next set of big levels to watch for?
You know, looking at Bookmap here, they do show some sellers stacked up at 420 with around 84,000 shares there on Friday. So that will be another area that I watch for past here. And keep in mind, Tesla moves a lot. So 420 could come into play a lot quicker than a lot of people think. But we have to go back a long time, back into the end of 2024 and beginning of 2025 to find these next big resistances. And I really like this 417 to 420 resistance where Tesla has bounced a lot. So that will definitely be like one of the more main areas of resistance that we watch for. But again, we have to go back a long way to see these, and I do think that in the short term, we'll have to kind of adapt as new resistances start to develop in the short term.
Beautiful. And then looking at the lineup for this week, how is the economic schedule looking? I know Wednesday is the most important day of the week as we have an interest rate cut at 2 p.m. Eastern time on Wednesday. 30 minutes after is when the big man, Jerome Powell, will speak. So definitely look out for that. But what else is on the lineup?
Yeah, on Tuesday, it looks like we actually have retail sales coming out for August, so be ready for that, along with a building permits and housing starts Wednesday morning before we get that Federal Reserve interest rate cut. And then Thursday, we do have initial jobless claims as well, and those are weekly, so they come out every Thursday morning. But nonetheless, with jobs in focus, that will definitely be a big topic, I'm sure, coming up this week. But I know that there's even a hidden thing on the schedule this week, Mike. We can see right here there's a good event with Meta. They are going to actually be having their Connect conference where the Facebook parent company is expected to focus attention on product offerings like AI glasses, which could end up being a pretty big topic. So be ready on Wednesday and Thursday of this week as Meta could end up moving quite a bit.
Yeah, and as we know, Mark Zuckerberg has been going pretty hard with AI lately, especially with those $100 million compensation packages for his AI researchers. So we'll see what happens there. Keep a close eye on it as the week goes on. And then looking at the earnings lineup for this week, nothing like too crazy.
Yeah, definitely not. We can see on Monday and after hours, there is Dave & Buster's. And then on Tuesday, EPM, FLUX. On Wednesday, Cracker Barrel is reporting in after hours. They've actually been in the news quite a bit recently with their logo change and then their reversion back to their original logo. And then we can see on Thursday, FedEx and Lennar will be reporting too. So definitely not the craziest week as far as earnings is concerned, but everybody's going to be more worried about Wednesday.
I wouldn't have it any other way, Tom. On a Fed rate cut week plus triple witching, screw earnings. It'll come back in a few weeks. But let's get right into the fun stuff, which are some setups and predictions. A stock that is on my radar is UPS, and it is to the upside. I know we had a recent big money play with this one. Basically on Thursday, the 80 strike call options had just under $1 million put into them for the November 21st expiration. I really like the risk reward here. I know there was a good amount of volume that came into these contracts on Friday, so I'm curious to see what comes from that. But looking at UPS, right now it's sitting just below $85 a share. In the worst case scenario where the stock continues to fall and it gets rejected lower, maybe it breaks below 82, maybe if you want to give it a little bit more wiggle room, 81.75. In that scenario, the setup would lose. But in the bull scenario, we do see a recovery, and maybe UPS can get closer to that $90 to $93 area, or maybe even more, depending on how the recovery unfolds. Either way, it's a stock that's on my radar. There's a recent big money play. The market's at all-time highs. The stock has been beaten down so badly over the past few years, and I really like how it is holding this these lower levels closer to like $83 and even $82 per share.
Yeah, it does look like a base is starting to try to form here in the short term. I'll definitely be watching it as the risk-reward ratio is pretty advantageous there. With my first setup, I'm actually looking at HIMS for a possible continuation of the upside. I love their move on Friday. They rose up 7.23%, and in the short term, I could actually see them on the daily chart starting to get a lot closer to some big areas of resistance. I really like $60 in the short term, and I feel like coming up on Monday or Tuesday, if we get a good continuation, we could definitely get to 60 plus. So I'll be watching for that. And of course, one other thing I'm watching for is for it to come up and test possibly its all-time highs. Its all-time high is closer to around 73. So if we can end up getting there, of course, that would be quite the move. And that, of course, will probably take a couple of weeks. But as we can tell, HIMS has moved a lot within this range. Note where all these green arrows are pointing, where we saw a lot of bullishness with HIMS as it started to move in this range. So that's what I'm watching for, is another move like we've seen in the past in this range, and it has been bouncing really well the past couple of weeks.
Sounds good. And yeah, HIMS is another one of those stocks that moves in a very asymmetric way. When it has momentum, it goes pretty crazy. So I'll also keep it close on watch. Another ticker that's definitely on my radar is RCL, but it's to the downside. And it's very similar to the Affirm bearish setup that I covered last week. Basically, we were looking at Affirm and it's just horrible price action. And RCL is forming something very similar, where we could see, especially on Friday, the stock fell basically all day long. It fell by a pretty good amount, around 4%. And even like as we zoom out on like a wider time frame, we can see the stock has been downtrending ever since the beginning of September, basically. So we are seeing a downtrend that is already existing, and it's starting to accelerate in the shorter term. For that reason, it's definitely on my bearish radar, and I wouldn't be surprised to see this stock get to that like 307 area over the next few weeks, for as long as it's putting pressure on its recent lows. Right now it's around 337, so that's definitely a lot of room. But again, the more pressure it puts on these recent lows, the the better the downtrend becomes.
Yeah, that is a good area of support down there around like 307. So I'll definitely be watching it closely and see if it could start to fall down into that range again. With my next setup, I'm looking at Palantir for a move to the upside. Actually, I'm sure that's going to surprise a few of you, considering how much how overvalued Palantir is, and how much we like to look at it for a possible downtrend or for a possible stoppage of the uptrend. But on Friday, as the market broke out, Palantir broke out as well. It rose up 4.3%. It was very consistent price action too, pretty much rising all throughout the day, all the way into close. So if we can get a good break of the high of day around 172 from Friday, I will be watching for a good continuation. It's not going to be a play that I look for with the longer term, or I'm not looking to enter into like long-term shares or anything like that up here. Of course, Palantir is pretty overvalued, but either way, it has good momentum in the short term, and I am watching it for a possible continuation off of that great momentum Friday. I feel like if the market goes up, Palantir is one of those stocks that, has been following along quite well recently, although it does have moderate correlation to the SPY.
Yeah, it's a crazy one. So let's keep it close on watch. And besides that, let's jump right into today's momentum plays. And with the first one, we have a BitMine, ticker symbol BMNR, to the upside.
That was quite the rip Friday, 15% plus. If they can break their high of day right at 56, which is also a good resistance, then watch for a breakout.
With the next one, we have D-Wave Quantum, ticker symbol QBTS, also to the upside.
Yeah, we had some crazy moves out of the growth stocks Friday. If QBTS can break out above 18, then watch for another continuation up.
And then with the last one, we have Pfizer, ticker symbol PFE, but to the downside.
That was a pretty bad move on Friday by Pfizer here, down 3.9%. They also have a very weak correlation to SPY. So if they can end up breaking under 2380, just under the low of day Friday, then watch for a downside move.
Sounds good. So we have these 3 tickers on the radar for potential continuations if and only if they break through the levels listed. So keep them close on watch. But as always, prioritize smart, disciplined, long-term trading habits above all else. Keep those stops small, and then also know why you are getting into any trade you ever place. You can learn about long-term sustainable trading habits for free in the Key Lessons channel of the StockedUp Discord. But besides that, Tom, let's jump right into today's $2.4 million big money trade, and we are looking at ticker symbol SLB. Basically, on Friday, the trader here bought the 40 strike call options that expire on September 18th of 2026. So this is an interesting trade where it's more of a longer term one, but it isn't out of the money trade, which shows that, assuming the trader is longing these call options, they are expecting a good sized move here. Looking at ticker symbol SLB, it is in the oil field services industry, and it's been a relatively weak stock over the past few years. And it looks like the trader here is positioning themselves to capitalize off of a, respectable move higher over this next year. It's definitely an interesting setup, but I think with a setup like this one, it is especially important. It is necessary to be willing to give the trade the time it needs, considering the expiration.
Yeah, this is a pretty insane setup here considering how much SLB has been pulling back over the past few years, but I do think that it's down so much that we could see a good upside move, and the $40 strike is a little bit out of the money, so again, there is some slight concern there, but I love the time, and it's a big trade too, $2.4 million. It's definitely not a slouch on the amount of money put into this big money trade here, so I love the bottom base also being formed by SLB, and it's been bouncing off that $32-ish support very well and holding that. So that's a good sign. And, what we really need is for this gap to start to fill. If we start to fill the gap on the daily up to like 41 to 42, this trade will start to look fantastic.
There we go. And if you're new to the channel, definitely consider obliterating that subscribe button so you can get our videos recommended to you more often. Every single day, we cover multi-million-dollar big money trades, the most important news, information, chart setups, events, earnings, and basically everything you need to know about the stock market every single day. Again, when you subscribe, you'll get our videos recommended to you more often. And Tom, let's also give a giant shout out to today's member of the day, Corazon in the StockedUp Discord, who actually had their first $10,000 profit with options. So huge shout out to you. Keep up the great work going forward. And that's a pretty beautiful profit screenshot with a Tesla there. It's definitely been a hot one in the short term. So huge shout out to you. Keep on rolling. And if you are into short-term trading, definitely check out that first link in the description and the comments down below. We're set for a very exciting week. And with the StockedUp trading floor, you get full access to our army of custom trading bots. You can chat with Town and myself all day long, join our weekly live events, access the big money trades every single day. But before we cover them in these nightly videos, access a bunch of tools to see which big money trades are doing the best, if the trader is still holding or not, and so much more. It's the place to be if you're into short-term trading, and you can save quite a bit if you use coupon code BIGMONEY with the link down below. Thank you all so much for watching, and let's crush it in the market this week.